If you follow the stock market or know someone who does, you must have heard of the recent market crash. You must have also heard that this sharp correction is somehow linked to the ongoing Lok Sabha elections. Wondering how these two are connected, and more importantly, what do the experts say should your investment strategy be in these volatile times? Well, you've come to the right place. Welcome to News9 Decodes. I am Suyash Maheshwari and I'll break it down for you in this video. Now, before we link the stock market crash and the ongoing Lok Sabha elections, let's make sure we understand a few key terms. Number one is market volatility. Market volatility means how much and how quickly stock prices go up and down. High volatility means big and fast changes, whereas low volatility means smaller and slower changes. So what causes this volatility? Well, there are a few things that can shake up the market. Political and economic events like elections or policy changes, outlook on various industries and sectors or news surrounding them, and of course, the performance of individual companies or news surrounding their management or new deals that they land. So let's come back to volatility. A key gauge to measure how volatile a market is or how drastically stock prices are ticking up or down is the India Volatility Index or India VIX. Higher VIX means the market is expecting big price swings, whereas a lower VIX suggests a calmer, more stable market. It's like a weather forecast but for market risk. If you're wondering how the India VIX is measured, well, it's measured on the basis of option trades being made over the next 30-day period in the F&O space, but don't let that confuse you. Typically, the stock market and India VIX share an inverse relationship. Data indicates that Nifty, an index of India's 50 most valuable companies, tends to fall when VIX is above the mark of 15, reflecting higher market volatility. Historically, India VIX was as high as 37.71 in May 2014, just days before the NDA government first came to power. In May 2019, again, during the run-up to NDA's second term in the office, India VIX climbed to 28.08 levels. On 27 March 2020, just as the COVID pandemic was spooking all of us, it spooked the markets too, and India VIX climbed to its highest ever level of 70.39. I hope from all these examples you're able to see that uncertainty pushes up volatility, and this is exactly what happened this election season too. Between April 24 and May 13, India VIX more than doubled, rising from 10 odd levels to over 20. In this run-up, the volatility indicator once again surpassed that 15-point threshold on May 3, and lo and behold, the market topped out on that very day. Remember the inverse relationship? That kicked in, and what followed was a 1,000-point market crash. Now, remember, markets are okay with negative news. What the markets are not okay with is surprises. And the inkling of a surprise or an unexpected event is what makes market volatile. Generally, a favorable election result for the incumbent administration boosts stock market, signaling political stability, while an unfavorable result can have the opposite effect. In the current scenario, the market had witnessed a strong surge after BJP's thumping victory in 2023 state elections, which set the tone for the 2024 Lok Sabha elections. Back then, the market was discounting a strong majority of 400 plus seats for the incumbent government. However, as we came closer to the elections, the expectations of a majority got thinner and thinner, prompting the market to recalibrate and leading to a market correction. Adding fuel to the fire right now is the incessant selling by foreign institutional investors who have pulled out equities worth 24,500 crore from the Indian market between May 3 and May 13, spooked by the low voter turnout in states where BJP has a stronghold. However, the mass exodus of foreign moolah was almost completely offset by domestic institutional investors who pumped in rupees 23,000 crore in the same time period, indicating their strong belief in the inherent strength of Indian economy and the markets. Right now, the Indian stock market is on an 8-year bull run, a feat that is not duplicated by any of our global peers. So election volatility aside, experts say that if you're in it for the long haul, chances are you'll end up making money. That's all for now. If you like this video, do hit the subscribe button and write to us in the comment section on what more you'd like us to decode right here on News9.